Good morning, everyone. It's 8:01 a.m. Chicago time on Thursday, the 29th of March, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the equity indices are up. The Dow up 60 points. The S&P 7.5. Trading inside of yesterday's range mostly. Yesterday was a kind of a snappy back and forth type of trade, but overall, the indices are seeing some positive returns. The laggards this morning: U.S. dollar, crude oil. Crude oil only down about 4 cents, 0.06. The British pound is down just 4 pips. Mostly the safety assets are unchanged or teetering on unchanged. The risk assets are climbing at about anywhere between 0.25% and 0.5%. So there's a slight allocation to risk this morning coming in. That's the temperament. We'll look at the overnight session. Most things are balanced. It's really important to remember that we have a holiday coming in tomorrow. Most markets, it's rare that this happens, but Good Friday is one of those days. All major markets are closed all at the same time. Usually the CME will open until noon Central or so, but pretty much everything's closed. So today is a pre-holiday trade, and we have a 3-day weekend, which means that there's likely to be some sandbagging going into the close today. Let's take a look at what we expected yesterday. There's some numbers that could impact us after the open. We do get Chicago PMI, which is a key number. Released to members a little bit earlier, I think at around 9:42, 9:41, and to the public at 9:45. The expectation for March is 62, prior 61.9. That's for Chicago PMI. At 10 o'clock, we're getting the University of Michigan final, expecting 102. So those are the two numbers that the market's likely to jitter around once we open. Here's what we expected yesterday. Yesterday's key expectation was for the market to test lower and end up back in the range. Was looking for a responsive push up, then impulse down, push below into 2586, and then bounce back up and finish somewhere in the range. That's basically what happened. The secondary scenario was to test below and then start trending back up. However, the news coming out of what are now called the fat stocks, the Facebook, Amazon, Apple, Tesla, has just not been so great. There's been some tweeting by President Trump on Amazon, and that's all coming together to cause the market to be heavy at the moment. But yesterday's trade was basically in balance with the last few days, and we continue on that balance right now. So that's what we expected yesterday. Here's what we got. Well, a lot of activity, so let's look at this in the 15-minute. So yesterday's range did not, although it was pretty decent, as 40 points, it pretty much tested below the prior day's low, which was what was expected. I expected it to dig deeper in. and it tested the 33.75 stock zone to the tick, and then basically traded sideways. What we have yesterday is a completely balanced profile. This is a Gaussian profile, about as pretty as they get, really. A neutral day. So what we've had is neutral, neutral, neutral. This is neutral extreme up. So this is neutral extreme up. Next day, neutral extreme down. And then this is neutral normal. So this is almost a picture perfect example of what neutral days could be, all in 3 days. Neutral up, neutral down, and neutral normal. And neutral basically says that both sides are active, that there is no dominant force on a neutral normal day, and there's a very strong dominant force on a neutral extreme day. Basically, what we got on Tuesday is the market attempted higher, and it really failed miserably to hold those higher prices, and a seller stepped in with a high level of confidence. So that's why I expected the lower low, which we got, which was a very tepid new low. It just barely got to the bottom of the stock zone there at 93 before the bounce up. Now yesterday, it just could not hold. The sellers could not hold prices below 2,600, and buyers could not hold prices above 2626. And currently we're trading 2615, which was a very much a balanced price for the day. In fact, I put it right on my book map. This line here is 2614.75. I drew it yesterday. So let's zoom out and look at how that line, that's a mess. So 29th. So if we look at, actually, let me zoom that in a little bit. So if you watch this line, let's start over. If we watch this yellow line here, you'll find that the market's kind of kissing it from below, then kissing it from above, just behaving like classic support resistance. And yesterday it just seemed to flush through, like you see here, flush through, retest, continue, and then when it gets above, it flushes through, retests, continues. So here it is again, acting as resistance, resistance, resistance. So that's where that stock zone comes from today at 2614.75. It just seems to want to battle this area, and we are trading right on top of it right now. We're at 2615 even, or 2617 actually, and it just seems to be a tipping point. So I'm watching this price carefully, but overall yesterday, the end result is a neutral day, neutral normal with a balanced profile. This is a consolidation day, a compression day, and the expectation today is that we are likely to break away from here. The problem is that we have a holiday tomorrow. A lot of folks are going to run out turn this into a 4-day weekend. So we'll see what volume looks like at the open and judge the business that's being done based on that. Okay. Here's the overnight session. The overnight session at 170,000 contracts. Not very much accomplished in the overnight session. We just basically are watching the same value area as yesterday, and we're trading inside a value, inside a range. The Asian session didn't accomplish much, and the European session, which opened right in here, took the market higher. But other than that, we haven't really done anything in the overnight session that gives us any sort of edge. We're just on top of the MC point of control at since the 22nd. So when we take these multiple days and draw a profile around them, see, we've been balancing since the gap down. If we draw a profile around all of these days, each profile represents 1 day of trading, the RTH session, and we have multiple days now. These 4 days are right on top of each other. We've moved the point of control for this entire range down to this 2613 or something, 2613 and a half or something like that. 2613, which is right below us. We're accepting these prices, these lower prices, in balance, and this looks to me, unless we rally today, this looks to me like we're likely to continue lower. We're not able to hold higher prices. We're not accepting value higher, and we shifted the point of control down. And if we do get below it, it's likely to have the energy to push through and get down into the 2576 area. So that's what I'm looking at. What's on deck for today? Not only is it a holiday. Oh, somebody just mentioned it. Not only is it a holiday tomorrow, but it's the end of the month, the end of the first quarter. So again, we're looking for some sandbagging or shifting into the close. So I'm expecting it to be active, then fairly quiet over lunch, and then a busy close. And this is the type of close today that you probably don't want to fade a run on. So you don't want to, if the market starts running up, today's close is not one of those that you want to challenge. It's likely to keep running. Opening in range in value, expecting an open auction. I'm expecting the market to test higher, challenge the overnight high. We're above the mid and the overnight point of control. I expect that to fail. I'm looking for this market to start moving lower. I'm expecting a lower low, but then I'm expecting it to get back into the range again. Okay, that's the primary scenario. So as we push up into 2620, with a backstop at 2626 as backup, I'm looking to get short for the turnover as the primary idea. Secondary, open auction, drifts down, hits the close of the prior day, bounces around in there, and then I'm looking for it to start giving that up. I'm still looking for a lower low, and again, move back into the range, and then potentially on the close, challenge this and start moving back up to the 33. That's scenario 2. Scenario 3 is an open auction that breaks lower into the close, consolidates, turns up, takes out the 26 level, yesterday's high, and then starts to move up and return to a higher, but close higher. So what I'm looking for here is a double distribution profile on the close on 3. However, the problem is a lot of news coming in, and it's just very it's very iffy. I've found the last 2 days very difficult to trade. In fact, I've realized some losses in the last 2 days. So to me, today's one of those days where, again, I have to sit and wait for at least the first 20 minutes to see who's establishing strength. And what the market's been doing is it's been reversing, especially the ES. It's been showing one hand and then playing another. And so it's one of those things where it's not, this trade basically is not favorable to how I read the market. And so in that situation, I don't just stop trading. What I need to do is just pull back and play my cards a little bit tighter. Just wait for better setups. And like I said yesterday, a lot of emails about not being able to take losses, a lot of emails about getting crushed. And I'm going to tell you that this is, times like these are where you're going to take losses. It's part of the business. It is, there's a substantial risk of losses. I read every morning. And these are the times when you have to exercise your discipline and understand that losses are part of business. Just like if you owned a retail store or a grocery store, spoilage is going to be part of the equation. You're going to have to throw some vegetables out because they didn't sell or they spoiled too soon. It's just part of the business. So don't try to avoid losses. Our business is not to avoid losses. Our business is to understand and manage them. Okay, so when you have losses, there's a chemical change, a biochemical change in our brain that also prevents us from being able to see things for what they are. So you got to pull back and let the story develop a little bit further before you take action. But I still take action. I don't take the day off and go for a walk. Good luck.